Well, staying with China, China's been buying up European debt, making it harder for the dollar here to rebound. For more on the latest currency moves, I want to bring in the global head of Forex strategy at Credit Suisse, Farris. According to Bloomberg's internal information, Ray and the Credit Suisse currency team are a Bloomberg best for overall currency forecasting. Ray, good to have you with us. And, seeing some of the currency movements. First off, let's start with China. Buying more European debt and also Japanese debt. That's all going to be bad for the dollar, right?
Well, the question is, how good is it for Europe and for Japan? The pace at which China has been buying European debt, basically buying the euro, has probably slowed over the last 6 months or so because of two factors. First, just in general, the fiscal crisis or the fiscal stress is the better way of describing it, in the southern periphery of the euro area.
Right.
But also because now some of those markets are things that probably China doesn't want to buy. And that makes the debt market in Europe simply smaller as an investable market for China. It seems that they've begun to buy a bit of Japan.
Right.
The data on that's still very preliminary. That would be completely new in a sense. I mean, it's not that they don't own any yen, but it seems that they own very little yen. If they were to start increasing their purchases of yen, that would be a very significant change.
And what does that signify?
And that could do a lot to them.
Ray, what does that signify for you?
Well, it says in part that they're having trouble diversifying their foreign exchange reserve accumulation. They've already got a lot of dollars. It looked a year ago like the right thing to do was to view the euro as the alternative currency. Along comes this nasty fiscal crisis that creates a degree of stress and questions credibility.
Right.
And that makes it much more difficult to put all of those dollars that the Chinese are buying to work in other places because other markets are just simply smaller.
Okay, so just very quickly, Ray, then, even if China continues this trend, though, is the dollar, though, still going to rise because of these risk concerns around the world?
Well, the probability is that the dollar is simply going to trend weaker over the next 6 months, a year. And that's less about the diversification story. It's more simply that U.S. yields are going to be very low. The Fed's on hold for a very long time. The U.S. looks to be in a very low growth recovery, and all that's going to be bad for the dollar. There'll be bounces that will be associated with, periods of risk off, of risk aversion as we're going through right now.
Okay.
But in general, we think the dollar is going to weaken.